In December 2016, the GASB issued an invitation to comment to gather feedback on 3 alternatives to the information that is now presented in governmental fund financial statements: near-term financial resources, short-term financial resources, and long-term financial resources. This is the 5th video in a series explaining what the invitation to comment is all about, and focuses on the long-term approach. Governmental fund financial statements prepared using the long-term approach would reflect the impact on financial resources when transactions occur, regardless of whether cash changes hands or not. It would be the most comprehensive of the 3 approaches, presenting both current, meaning 1 year, and non-current assets and liabilities and showing them in separate sections of the statements. It would provide information about a government's ability to meet service needs and pay obligations that have been incurred related to non-capital activities. Under the long-term approach, all assets would be included except capital assets. All liabilities would be included except capital-related debt. To provide information that is also of a shorter time perspective, current assets and liabilities would be presented separately from non-current assets. Under the long-term approach, deferred inflows and outflows would be recorded related to inflows and outflows related to a future period that do not meet the definition of an asset or liability respectively. For example, amounts collected or receivable related to property taxes levied for the following fiscal year would be deferred inflows of resources. Deferrals related to pensions would be reported as well. Under the long-term approach, inflows and outflows of resources would effectively be reported similar to the government-wide financial statements, except for transactions related to capital assets and capital-related debt. For instance, interest payments on outstanding debt would be an outflow of resources, but repayment of principal other than non-capital debt would not. The using up of inventory would be an outflow, but not the purchase of inventory. Outflows and inflows related to the acquisition of capital assets or the repayment of capital asset-related long-term debt would be reported separately from other resource flows. The long-term approach would be an improvement over the existing information in the governmental funds for a number of reasons. It would make financial statements more consistent by including all transactions related to financial resources. It may be more useful for assessing inter-period equity, the degree to which a government raises sufficient resources to cover its costs each period. If a government balanced its budget by borrowing or postponing pension contributions, these actions would not result in a higher fund balance under the long-term approach. It would provide information on all non-capital liabilities expected to be paid from governmental funds, and because the information is more akin to what is reported in the government-wide financial statements, it may simplify financial reporting. There are also a few potentially negative aspects of the long-term approach. Governmental funds would no longer have a shorter time perspective that is distinct from the government-wide financial statements. The long-term approach may have some inconsistencies of its own because it treats capital assets and related long-term liabilities differently from other assets and liabilities. The long-term approach differs significantly from cash basis accounting. It may be necessary to present a cash flow statement for the governmental funds, which is not currently done. You can read more about the long-term financial resources approach in paragraphs 29 to 37 of Chapter 2 of the Invitation to Comment, which can be downloaded from GASB.org.
Your feedback is very important to us, and we would greatly appreciate your input. Please review and share your comments by the March 31st deadline.